following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 6th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, folks. And my outcome is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. I love this tool. This tool is called You Find What You Look For, Good or Evil, Problems or Solutions. Reality, folks, is often a matter of personal perception. You know, the way two people respond to the same incident reveals that almost every time. Think about it like this. Imagine the following scene out there. Two friends are having dinner at a restaurant. Maybe this is something that you can even think about. Two friends having a meal at a restaurant, and they overhear the couple at the next table, and neither friend speaks of the situation until later. Then all of a sudden, one woman says to her friend, "Can you believe the nerve of that man telling her what to eat? Why, he treated her like a child." Her friend's response? Well, the menu was in French, and I think he was just simply helping her to decide what to order. Each interpretation is based on this perspective of the individual. Reality, folks, is often a matter of personal perception out there. The great teacher Seneca said, "Eyes will not see when the heart wishes them to be blind." When the heart wishes them to be blind. I began this week on Monday talking about wisdom. And wisdom, folks, it takes courage out there. It takes courage to open our inner eyes, the eyes of the spirit of our heart. We do this by, and I'll underline this word here for you, choosing. Choice, folks. We do this by choosing to look for the good in all situations, by deciding to place our attention on workable solutions to problems rather than focusing on what we perceive as being wrong. Don't you just wish our politicians were listening to Stevie-san here this morning? Oh my goodness, deciding to place our attention on workable solutions to problems rather than focusing on what we perceive as being wrong out there, folks. The solutions lie from looking within, not from without, and looking up, not looking down, and looking for the good, not the so-called evil, folks. And looking up, we direct our vision away from limiting beliefs of the world or our own limiting belief structure out there. Life, folks, is like the movie that you see through your own unique eyes. George Bernard Shaw, he once wrote, "The people who get on in this world are the ones who get up and look for circumstances that they want." And folks, if they can't find them, what do? They make them. Make your own circumstances. This next sentence is for my friends, or should I say mates, down under. Thoughts, folks, thoughts are like boomerangs. They will come back to you. Attitude, folks, attitudes are the mind's paintbrush out there. So my question to you this morning as you begin Terrific Thursday is, what picture are you painting for yourself today? In fact, let me ask you one more question out there, because questions, they absolutely control your focus. If you knew with certainty that everything in your life was going to turn out the way that you wanted, that maybe the timing was just off a tad, how is it that you would live your life today? How is it? Remember, reality, folks, it's a matter of personal perception, and thus, how would your perception change if you knew that your life was going to turn out just primo out there, exactly the way that you wanted? Just maybe the timing was a little bit off. Maybe there were some detours along the way, folks. Make sure you change your perceptions. Look up, not down. Let's go look up at these markets here. We've got the Dow futures off about 8 points, the ES Mini off 2.25. Let me change my monitor over here so that you folks can actually watch on Tiger TV. If you're listening in on the radio, or on the maybe using the mobile device at using tfnn.mobi. You can always catch an archive of this show on Channel 9. What you also can do is you'll be taking a look at the charts. I promise to teach you something about the breathing patterns of the markets out here. We'll look at different scenarios. You can always give us a call at 877-927-6648. Would love to hear from you this morning. Not only will we talk about the markets, obviously everybody's talking about Apple. Apple right now trading down $9. Yesterday closing out at $538.79. $10, I should say now, down another buck since I opened, trading out at $529.84. So we'll go take a look at Apple. Apple going to go into the November 16th swing point out there. It's got volume. So Apple will be providing the market with some key information here today. Talk about reversals in marketplaces. Well, first let's take a look at the market where we're at here today. You got King Dollar trading up 18 ticks, primarily because of the yen and the euro out there. So we'll take a look at those. Gold trading off $2 right now, out at 16.91. Silver down about 0.7% here, off 24 pennies, out at 32.71. Light sweet crude off $1 this morning. That's down 1.5% out there. If we take a look at the world markets here, you've got the DAX. The DAX trying to break out. Maybe a head fake, maybe a breakout. The DAX is up 67 points right now, trading out at 75.20. The FTSE not breaking out. It's up 16 points, but we'll go take a look at what the FTSE is trading into. It's some overhead resistance out there. Shanghai off $3. Hang Seng off $21, and the Nikkei up $76. The Nikkei is trying to break out, hasn't made its way there yet. Again, our call number 877-927-6648. So let me ask you the question here. And what I've got on my chart here, or what I've got on my screen, I've got the 10-minute S&P futures contract. Now, one of the tools that I have turned on here is a tool that measures, using Fibonacci expansion and contraction, measures mathematically the expansions and contractions between swing points. So this tool is on live, so it makes it very easy. Now, you can simply use a tool on your system. Your charting system may not have this application. Most likely it doesn't, unless you're using Ensign Windows out there. But you can certainly draw these in with the Fibonacci expansion retracement tool that is really on everybody's system out here. But as we take a look at coming into, let's start right now. We'll go start with where we're at, and then we can move back to the left-hand side of the chart. As the market was moving down, as we were coming on the air at exactly at 9 a.m., there was a little hammer candle that was formed. That hammer candle formed where we see a 100% move of a move. That's nothing more, folks. When I say that, that's nothing more than either coming back to or going up to a previous swing point. Well, on the 10-minute chart, that would be the swing point at 3:10 a.m. when it also traded down to 1404.25. Of course, when it got down there, it was making a 0.618 retracement, a 0.618 retracement off the lows that came in at 11 o'clock yesterday morning. We're going to go back to those lows at 11 o'clock yesterday morning because I'll teach you how to read the EKG of the market, because they work this way all of the time. And so these are a set of tools, a stethoscope out there where you can just simply listen in, or you can visually actually see the market and what it's doing, when you can expect turns. So that way you're not confused. You're not saying, well, how did that happen? Or why did that happen? Markets don't go straight up. They don't go straight down. They have EKGs because it's nothing more than the heartbeat, just like you and I have, the heartbeat of all of the hearts out there, of the traders, and it works this way all the time. So you can follow along and you can understand when the rubber band is going to get stretched and when it's going to find perhaps a support or perhaps a bounce back area. So as we came into the 9 o'clock session, what we had here was we had a little hammer candle out there. It was a type 4 hammer candle, still a hammer nonetheless. What does that say on the 10 minutes? It says, folks, you don't want to see a close below 1404. If you do, what does that mean? It means it will go down to the next level. What's that next level? 0.786. If you want to know the number, we'll just go off of the low coming in at yesterday at 11 a.m. all the way up to the high that was put in pretty quickly at 1250. The 0.786 level, 1400.50. It's really 1400.67, but the futures aren't going to trade that way. So 1400.50, that is the 0.786. That is when if the ES-mini trades below the hammer candle from 9 a.m. Again, that price point was 1404. Okay, so what we can also see here, and I'm just going to simply just start going back here, along the left-hand side of the chart so I get my mouse here to work. Now, as the market was moving up into the time frame, most of you were probably snoring maybe you weren't snoring, but you were sleeping at the time frame of 4:20 this morning. Again, we're looking at a 10-minute chart. At 4:20 this morning, what we saw the market moved in from an EKG standpoint, moved into an overbought condition. That's where the heart was really racing on the way up. As it moved up there, it was also making a 1.272 expansion of a set of swing points. That swing point being coming in at 6:40 yesterday evening. That level, 1409.25, all the way down to the low that came in at about 40 past midnight, so 20 minutes to 1, when it got down to 1404. That was a 1.272 extension of that area. It was also a 0.618 retracement of the swing point high that came in yesterday at 3:20 in the afternoon. So therefore, if you just simply were looking at the EKG, the heartbeat of the marketplace, you knew you had a retracement Fibonacci number, sweet 618. You had a 1.272 expansion number, and you got into kind of what we'll call extreme overbought territory as the level, utilizing the relative strength indicator, got up to 79.11. 70, folks, tells you you are starting to tread in overbought territory. Higher than 70. Now, higher than 70 tells you what? Tells you get ready to see some type of reversal. Now, you want to be able to watch for a bearish candle signal when you are up at the top. And did you get that right away? No. That's why you want to have some patience out here. Or certainly if you were long, if you were trading the futures. Again, we're looking at an intraday chart here. It works the same all the time. Now, I'm just going to switch back here because we're going to be going into break here in a moment. So as the market was moving down, after that little short lesson out here, as the market was moving down and it was making a 1.618 expansion of a swing point, and it was getting into really oversold condition, is it really a surprise that we saw a little bit of a snapback yesterday? Something to think about. 877-927-6648. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks, as we take a tour around the world here. The DAX right now trading up 64 points. What we can see here is the DAX is trading up over its swing point high from September 24th. That's important. That number out there on that swing point is 7478.53. It was tested once and failed. It was tested 4 trading sessions ago on December the 3rd out there. Failed on lighter volume. That is an area that has been tested here over the time period going back between September 21st and today. It'd be important to watch where the DAX closes today. It closes in 2 hours and 6 minutes. From a bullish standpoint, you'd be looking for a close above that 74.7853. Bearish, looking for a close back below that for another failure out there. So therefore, the DAX always being an important chart for us to be paying attention to. It helps to set the market. What do I really think is going on? I think it's a head fake. And why do I think it's a head fake out there? Well, all we have to do is go take a look at the Euro-US dollar currency pair. The Euro-US dollar making a triple top out here, doing that yesterday as it got up to a high of 131.52 out there. We can see 3 tops in place. The one at the 1.618 expansion. That was a butterfly pattern that completed September 14th out there. What we can see is that area was tested again October 17th and October 18th. You are seeing really a 2-day stitched pattern here. You'll get a real bearish sign here if the euro closes below 1.30508 today. A lot of time left in the trading session, but right now the euro is going to pull back. Whether it will pull back to the 0.382, 0.618 or further, the bulls and bears will tell us, and they will tell us with candle signals out there. I suspect it's going to be 1.28773-ish. Let me give you the number, actually. The number I'd be looking at is 1.28321 or so before we get our next piece of information from the euro. What does that say? That says that's going to put pressure on the markets. That's why you've got the U.S. dollar index up 19 ticks. Let's go see what the yen is doing. You've got the euro at 57.6% of the U.S. dollar index. As we take a look at the Japanese yen, that is the number 2 weighting at 13.6%. So let's go see what the yen is doing here. The yen hanging out at that 0.786 Gartley sell pattern. It's been hanging out here really for quite some time, since November the 22nd out there, since Thanksgiving. And it's trying to work off its overbought conditions out here. Had a strong day yesterday. Looks to me still like the yen wants to back off to at least the dead cat bounce to at least the 80.65 level. I think you just need to be patient here since we've got that 0.786 Gartley sell in place. That is on the yen out there. If we go back to our world markets, let's go take a look at the FTSE. Let's go see what the FTSE is doing out here real quickly. The FTSE up against let's get rid of this retracement area. The FTSE is up against a resistance line. I'll go ahead and draw that out here. You can see the FTSE trading up into that today as well. So where the FTSE closes is important. You can see the resistance line. The resistance line on the FTSE, if you're watching us on Tiger TV, you can benchmark it right around the price point. We'll call it the swing point out here, either from the October 18th, and let's just call it around 59.28, give or take a buck or two. That level was first hit on September 14th. Then it was hit on the 18th of October. Then again on November the 7th out there. What do I expect? I expect we'll see a big sell-off tomorrow. It'll be Friday when we see the sell-off, whether both in the FTSE and the DAX. Even if the DAX closes up above the swing point today, again, I believe it's more of a false break topside on the DAX, basically because of the currency market out there. Let's go to Lou in Nashua, New Hampshire. Lou, thanks for calling. Thanks for holding.
Yeah, I'm looking to short IWM.
Okay, so you want to short IWM? Let's go take a look at the Russell 2000 futures contract for you. The Russell 2000 futures also in an area of resistance. That resistance going back to November the 1st out there. What you can see here over the course of the last 4 trading sessions, and we'll call today a 5th trading session, you've got the series of small-bodied candles out here. Now, the top of the range, you'd love to be able to try to get in on this trade here if it could get back up to maybe the highs of about 827 or so. So you got about 7 points up there. You certainly could take a position here. You'd consider closing it out if you got a close on the futures contract above 830. We'll call it 830. But so far what we see here is we see a lot of indecision. That's what these candles here really mean for you, Lou. There is indecision out here. It also means that the move up has lost its energy and its steam. So the back is up against the wall here. You certainly can go short the IWM. You got to give it a little bit of room. You'd prefer to sell into a little bit of sign of strength here this morning, but with the euro trading down, don't know if we're going to get there. Hope that helps you, Lou.
Yeah, thank you.
Have a great morning. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 5 points right now. S&P off 2. Composite down 7. The Russell 2000 off 1.5 points. Microsoft up 27 ticks. Intel up 24. Google up 4 pennies. Cisco up 13. Apple down $18 with volume. I've got the 5-minute chart up on the screen here, and way more volume than even yesterday at any point in time yesterday. So far in the open here, during the first 5 minutes, we got 1 more minute to go. 3.8 million shares out of Apple. All bearish indications out here. So you've got volume coming out of Apple. It is moving down into a swing point, but in 5 minutes, 4 million shares there. We'll see if the volume continues to pick up steam or drops off as we come into the next 5-minute session out here. So Apple leading the charge on the way down. You got Men's Warehouse behind them off $3. That's off 10%. We'll look at that stock chart. Vera Bradley out, I don't know if it was out with earnings, but down $2 off 7%. This morning, Align Technology, ALGN, is off about 5-6% off $1.40 or so. Scripps Network, SNI, off 2% this morning. Baidu off 1.5%. Amazon down $1.27. Freeport McMoran struggling again this morning, off another 5%, down $1.46. Popping to the upside, Epic Holdings, EPHC is the ticker symbol, up 26%. Must be a merger or buyout there. Let's take a look at it. Epic Holdings to acquire, the bank group is going to acquire Epic Holdings for $668 million in cash. Lululemon, not making the lemonade here this morning. Instead, up about 5%, up $3.41. Akamai Technology, AKAM, up 7.5% here. Noble Energy, NBL, up 2.5%, up $2.35. Garmin has found its way up 4% this morning, up $1.70. Canadian Pacific Railroad, CP, up $1.77, almost 2% here this morning. Walter Energy, WLT, up about 5%. Let's go back, take a look at the daily chart on Apple, see what Apple is doing. It's coming into Stevie's hammer candle. So gaps down this morning. It is the third gap down after making its retracement high on December the 3rd. So a small gap, the low on December 3rd, 585.50, high on the next trading session, 575.85. So what's that, about 576 to 585. So it's about what, $9 we'll call it. The next gap is yesterday's gap. That is the gap from December 4th. The low there, 572. The high of the yesterday's session was 538. So 538 versus 572. So what is that? $30 or is that right? Hold on. Am I catching the right thing? Low 572, high 569. There we go. Okay, I was looking at the wrong thing. Thought so. So 569. So, a few bucks. And this morning here, the largest of those three gaps out there, 538.77. Yesterday's low. This morning, opening up at 529, really 528.94. We'll see how this trades. Don't know if it's a three-gap play, but you got the right you've got the right indicator with regard to three gaps. This is pretty soon, but three gaps. You got the highest percentage and widest dollar mark here on the third gap today as it comes into what is an area of strength, which is this hammer candle out here from November the 16th. It was November 16th. There was this hammer candle here, as well as some key reversal days in the marketplace that gave us the signal to go along the market here, the general market holding up pretty well, considering where Apple is trading. In fact, the New York Stock Exchange right now up 10 points. So we'll go take a look at the New York Stock Exchange because the underlying market is actually saying strength, not weakness, when we take a look at the New York Stock Exchange. So it's a few stocks here that are pushing to the downside. So we've got a test of the hammer candle. Now, that's got 45 million shares in it. We know that during the first 5 minutes of trading that Apple had pushed down about 4 million shares. Let's go get that exact number here. In that first 5 minutes of trading, it was 3.7 million shares to the downside. Now, on the daily chart as well of Apple, you can see it getting towards that oversold area. You got to wait for a bullish sign out here, but we could see a reversal. And that would be a pretty decent signal in the marketplace if, in fact, that is what we got today. So we'll be paying attention to Apple most certainly. Let's go take a look at some of these other stocks here, see how they're trading. How about Men's Warehouse? Let's go see what that is doing. That is the second in the clubhouse on the way down. MW is the ticker symbol there. So Men's Warehouse moving down into an area. Let me refresh my screen here. That was the last time where it broke out. So this thing is in a consolidation area. It's got gaps all over the place here. These are wide gaps. So Men's Warehouse had moved up. I don't know what the news was behind it. Doesn't matter. You're taking a look at the September 6th level here where it moves up with 3.8 million shares. Got down and fixed that window back on the 14th of November. Thank you. And so that means that was really no longer a support area. What this did, because it just simply fixed the window that was out there. So Men's Warehouse right now is trading down in the last time where it broke down. A supply line from June the 7th out there gaps down with 6.3 million shares. So far in 10 minutes of trading here, already 648,000 shares out there. So as we take a look at Men's Warehouse, it's got, let's put this on a longer-term chart. It'll be a little bit easier. Let's look at the weekly chart of Men's Warehouse. So this is certainly going after its swing point lows on the weekly basis back to July 27th of 2012 out there. That low is $26 even. It's got a pretty decent level of support. It's moving into this. If you take a look at this December 10th, 2010 week, it's got a volume bar to the downside, 13 million shares. It's trading inside that as well. That would mean that since the low of that bar has not been tested, $23.03, that too is game out there with Men's Warehouse. Not really, this thing has really been kind of consolidating, moving up. A little bit of a bullish move off of the 2008 lows out here, but nothing spectacular. Men's Warehouse struggling this morning, down about 9%. Let's go take a look at Lululemon. Lululemon popping to the upside. LULU is the ticker symbol, as I recall. This has some institutional damage in the equity, but let's go see if what is going on here. The institutional damage I'm referring to is when it really gapped down with institutional selling back on June 7th, 2012, had moved down with 18 million shares out there. Of course, it came back, had a nice sign of strength out here with 17 million shares on September the 7th. So it was celebrating Ben Bernanke and the ECB on September the 6th, I suppose. Has good volume up there. The level of support on this really is the low of that September 7th level. There was a Morningstar reversal candle that took place on November the 15th and obviously the 16th out here as it made its move higher. So right now, what is it going after? It's going after its last downdraft. It's got some resistance out here. There is an open window. Let's go take a look at it. That open window, folks, is from the last time where it moved down, which was October the 18th. We'll draw our line across here, take a look at it. So it has not even made it up to the area where it broke down. You'd have to say that it's really just above the high of October 19th, where you had 5.6 million shares. So it looks to me like that's where it wants to head to. It wants to go test that open window, see if it can repair it. That would be meaning that it would need to close above 74.20 out there. Otherwise, just simply a little consolidation range here from the $74 down to the $65 range out there. That is on Lululemon. Apple down $7 right now. So I'm going to switch back and forth here just so we can pay attention to Apple and see what's going on out there. Why? Because it'll have an impact most certainly on the markets and what the markets want to do. So right now, Apple into Stevie's hammer candle and trying to get back above that level. The high there you want to mark on your sheet of paper is going to be 530 even. That was the high of November 16th. It's traded at 530.49 right now. It's changing so quickly. It's just changing a tad above that level. So we'll keep going back and forth throughout the next hour and 15 minutes and pay attention to Apple out there. Let's go look at Akamai Technologies. AKAM is the ticker symbol. That is the second in the, actually really the first in the clubhouse if we get rid of Epic Holdings, which is a buyout. So you've got the leader in the clubhouse is Akamai up 7% here this morning, gapping up. So let's go see what Akamai is doing. Here's a stock chart with a lot of gaps, both to the upside and the downside. Let's go and put Akamai on a longer-term chart. So let's go take a look at the monthly, then the weekly. We'll come back to the daily chart out here. Akamai running into a resistance zone that really goes all the way back to February 29, 2012. Let's just draw the parallel line across this level. It actually goes even further back than that. Let's come back here, and we can come all the way back. Let me get my line tool, and then we'll draw it. It really comes back to the high of March 31st, 2011. So trading at a resistance level at that price point is $39.90. So $39.90, it's a $38.20. That was March 31st, 2011. You can see every time that the equity has tried to get up there, which would include February 29, 2012, it reversed. Includes April 30th, 2012, it reversed. It includes September. It includes October of this year. It includes even last month as well. So look for that to be a real resistance point. Akamai would be breaking it out if it could close above that level. And I would say really a close above the April 30th high, 41.25. That is on Akamai Technologies. That is the monthly chart. So it's helpful to start at the monthly. Let's go take a look at the weekly chart out here. Weekly chart really showing you the same thing. There we go. So here's a volume bar that sticks out. So this volume bar here now on the weekly give you an indication as to why it runs into resistance at that level. We're going to draw the line across the chart here. That's going to be the low now of February 11th, 2011 out there. That low is $39.90. You can see each time Akamai has tried to make it up there, it has held as a resistance area. Why? You've got a supply line. You've got the institutional selling that ran all the way from $49.38 to a low of $39.90 on the weekly chart out there. You do have Akamai on the weekly chart, though, did come down and test the lows here of July 30th, 2009, and it tested those areas with lighter volume. Only really didn't test the low of that week, got down into the body of that candle. When it did that, And when it gave you the reversal signal was October 7th, 2011. Of course, we know October 4th, 2011 being key out there. You got a bullish engulfing candle on Akamai. So that was the weekly out there and the monthly. I think that's pretty good enough. Pretty good enough. How about that for the English language? I think that's good enough for us to analyze Akamai and where it is at. Let's go take a look at Vera Bradley. VRA is the ticker symbol. Let's go see what that is doing. That's down about 8% here this morning. Let me see if Vera Bradley was out with earnings. Let's see what Vera Bradley has to say. Oh, that didn't help me a whole lot. Of course, you folks didn't see what I just did. Vera Bradley, net revenue $138.3 million versus $121. So they're growing their revenues. Net income $17 million versus $12.9. So they just simply must be getting hit because of just luxury goods retailers out there. Gapping down here this morning and doing it with volume. So let's go see where Vera Bradley is headed to. Breaking a swing point, breaking it with volume. That is confirming an A to B equals CD down. Let's go draw that pattern in the chart. We'll start with our A point. On the way down, the A point is going to be the high of October 25th, $31, round number high out there. In honor of Mr. Basil Chapman, who is doing his workshop today and tomorrow out there. If we take a look at Vera Bradley, looks like it makes a 0.382 retracement. I'll use the November 29th high, $28.45 as the B point. We can see gapping down and making the 1-to-1 A to B equals CD on the way down. It's going to seek lower price. Retracement, just about a 50% retracement, was that B to C leg. What is sticking out here on Vera Bradley on the daily chart? Really the 1 to 1.272 A to B equals CD. Also a high volume candle, August 30th, 2012. That candle not being tested here just yet. That price range, $21 to $22.47, 3.8 million shares down there. If you take a look at today's action, in 19 minutes of trading, it has done 784,000 shares, so it may have the volume as it approaches that level. That says Vera Bradley would then want to go down and test the actual swing point. That would be September 6th, 2012. That price is $20.22. Relatively flat market out here. The Dow down 39 cents. S&P's off $1.37. Composite down $2.50. Small caps off $1.10. Apple down $9 right now. 877-927-6648. Be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. As we come back from break here, we've got the Dow's up 7 points. S&P is flat. Composite up $2. The New York Stock Exchange, and I did say we would take a look at that, so we most certainly will go over and take a look at the New York Stock Exchange Index. We'll do that after we take a look at the Apple chart here. Apple right now trying to close the gap here from this morning. Now, when I started the show, this morning's show, we were taking a look at the 10-minute chart on the futures contract. We're looking at actually the ES Mini out there. Could have chosen any of the futures contract and just really stitching it together with understanding the EKG of a marketplace. Now, this is using ultra short-term charts out here. These same techniques work for any time frames. But what they will help you to do, folks, they'll help you to answer the questions that you have. And that's important. You know, when you ask yourself, you know, where did that, what they'll also really help you to do is identify areas where you want to go ahead and place a trade. So you can use this as it's an excellent set of indicators out there. It's available in everybody's trading system and just helps you to understand what's going on inside the market. That way you don't have to be surprised. It's kind of an expectation out there. So as we take a look at Apple, we're in the 5-minute chart here, so I can show you how this works all the time. It also means you don't want to get necessarily too eager. It really helps, so if you trade intraday out here, just to understand what the heartbeat of America is, or the heartbeat of the stock market chart. So as we take a look at Apple, on the 5-minute chart, we can see as it moved down, getting into that very oversold condition was really there as you came into the close yesterday at 3:50 in the afternoon. So as Apple was moving down throughout most of the morning here yesterday, it was really kind of moving down and sideways. You know, not a big shake. Let me just refresh my screen, make sure I've got all of the accurate data out here. But you can see here as it moved down into that 9:35 time frame. Let me go ahead and put this one other indicator study on the screen. Using the relative strength out here just for that short term, getting down into 14.6 was the reading. Anything below 30 says what? Says, okay, this thing needs to work off that oversold condition. How is it going to do that? It's going to do that by either moving sideways or bouncing up. What has Apple chosen here right now to work that off? It's chosen to bounce up. That's all that it is doing. Then you want to start paying attention to volume on the bounce out there to see if the move is real. Because without quality volume, folks, you don't have a real move either to the upside or to the downside. Now, I'm just going to go ahead and take this 5-minute chart back here. Let's take a look at another time when Apple had moved down if the open into an oversold condition. That's going to be at the 9:35 time frame on December the 4th. What's today? December 6th out here, right? Yeah. So 2 trading sessions ago, you can see moving down, getting a reading of about 20, actually got a little bit lower as a push, just a little bit lower to about the 16 level. How did Apple work off that oversold condition? Take a look at this. Sideways move. If you're watching us on Tiger TV, take a look at relative strength. As it was working sideways, what did it do? It moved up into where it got into, in essence, close to the overbought conditions. If you were going to sell Apple, do you want to sell Apple when it's down and it has a weak relative strength reading, or do you want to sell something when it's up towards the highs out there? Well, I'm giving you big clues. If I start my day telling you that I want you to become a better money master out here, here's a tool that'll just simply pay for your being here today for the rest of your life. Absolutely, for the rest of your life, you can use this indicator. It's an easy one. You don't have to worry about swing points. You don't have to worry about anything other than understanding the EKG. Right now, you are a PhD of these markets, folks. How do you like that? Stay tuned. The Money Masters show is up, folks. Remember, our destiny, it's not predetermined for us, folks. You and I, we determine our own destiny. And always remember this. You've got an amazing power within yourself, folks, and that power is so strong that it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, but mostly, folks, create fantastic, loving families. Thanks for being a part of the TFNN family. Have a great day. Take care.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.